Hi everyone, welcome to episode 2 of the Patient Wallet channel. If you are new here, my name is Tasos and I am a CFA chartered holder and I am based in the UK. On this channel, I share my personal finance and investing journey, and my goal is to help one person at a time with their financial journey. Today, I will show you my first portfolio buy and go over Google's earnings. As always, before we jump into the video, a few disclaimers. These and all my videos are for educational purposes only and should not be taken as financial advice. If you invest, the value of your investments can go up as well as down, and when investing, your capital is at risk. Nothing shared in this video is investment recommendation, and please do your own research before you take any financial decisions. In my last video, I shared my net worth, and as part of that video, I showed that my stocks and share size of portfolio was sitting at 0. Last Monday, we jumped back into the market buying 21 shares of Alphabet, ticker symbol GOOGL. The average price was $189 or 140 British pounds. Why we bought Google? At a high level, there are 4 reasons. 1. Google has strong balance sheet. 2. They operate high margin businesses. 3. They are experiencing high growth. And 4. Google is at a fair valuation in my opinion. Given these characteristics, I do expect Google to outperform the S&P 500 over the next few years, and as a result, we decided to make Google our first buy. If I jump into earnings, I wanted to basically go over the earnings and show you what I look for in these releases. I always go to the source, so you will find these documents in the investor relations section of Alphabet. Basically, Google smashed expectations. EPS was $2.31 versus consensus of $2.17, and the revenue was $96.4 billion versus consensus of $93.9 billion. So Google had a double beat, and as a result, as I record this video, Google stock is up post earnings. As we can see here, revenue grew by 14% year over year, income from operations grew by 24%, and diluted EPS by 22%. Looking at operating expenses, as we can see, they increased by 20% year on year, or by around 4.3 billion compared to last year's quarter. But keep in mind that this column here includes a charge of 1.4 billion, which relates to legal settlements that Google had to pay over the quarter. Subscriptions, platforms, and devices grew by 20%. YouTube, which is the leader in streaming, grew by 13%. And search, which was supposed to be dying, grew by 12%. Looking at the operating margin, you can see it remains stable year on year and sits at 40.1%. Looking at Google Cloud, you will see year-over-year growth was 32%. Operating margin improved from 11.3% to 20.7%. And overall operating income grew by 140% year on year, which is a staggering growth for the business. You'll see CapEx went to the moon as it increased by 70% year on year, and the management raised their full year guidance on CapEx by 10 billion, taking it to a total of 85 billion for the year, and shareholders should be very happy with this investment that Google is making. Okay, a couple of additional data points that I wanted to check based on their release. Number of employees increased by 4.2%. Generally speaking, at some point in time, I want to see this number stabilizing or going down. This will show me that the AI used internally at the company will lead to some efficiencies and cost savings over time. Looking at their balance sheet, Google has a stellar balance sheet. You'll see that they are holding 95 billion of total cash or cash equivalent and only have long-term debt of 23.6 billion, which you cannot get any better. Looking at the diluted number of shares, the number decreased by 2.4% year on year. And again, I would like to see this number come down over time as the current valuation of Google is not demanding. But at the same time, I understand that management needs to use cash to grow the businesses to maintain either market leadership positions or gain market share from competitors. And lastly, looking at the cash flow statement of the business, I personally like to recalculate the free cash flow of the business, taking into consideration stock-based compensation expense. I consider that as a real expense, but it's not a cash outflow, and as a result, it's not taken into consideration when calculating the free cash flow of the business. The way to calculate the free cash flow, including stock-based compensation, is take the net cash provided by the operating activities, deduct stock-based compensation expense, and also deduct CAPEX, which is this line here, under purchase of property and equipment. Calculating this, as you can see, for the first half of 2025, the number is down compared to last year's first half and currently stands at 12.7 billion US dollars. The primary driver of this is basically the increase in purchase of property and equipment, as that number increased by 14.5 billion over the same period. I am personally okay with that. Management has indicated cloud demand is high and they need to build out additional capacity to capture this demand. As we have seen, Google cloud margins are around 21%, so it is a high margin business, and I expect higher margins in the future when I compare their margins with other competitors such as Amazon and Microsoft. I also listened to the earnings call, and the key takeaways for me are as follows. On search, this is not a dying business, but at the moment it is thriving. Processed monthly tokens have more than doubled since May 2025. Gemini has now 450 million monthly active users, which is 50% higher than Q1. And management mentioned something that I suspected myself, as I noticed it when I was searching something on the internet. The more ways you can search something, the more searches you complete. The new ways of search, such as AI modes, AI overviews, etc., are expanding the ways that people search. On cloud, this is the cash cow in the making for Google. As we mentioned earlier, operating income doubled since last year, which is massive. The backlog is at 106 billion US dollars for this business. Deals worth over 200 million US dollars have doubled year on year, and Gemini use was 35 times compared to last year. Again, massive growth for the business. On YouTube, management highlighted YouTube has been leading the streaming for the last 2 years and continues to gain share on TV watch time. This is, I think, generational tailwind for Google as younger generations grew up with YouTube, and they are also making moves into sports with the first Friday NFL game for the upcoming season expected to be live on YouTube, which again I think it's a good move from management. Lastly, Waymo, Google's robotaxi service, and in my opinion the most advanced robotaxi service out there. Waymo continues to enter in more cities and expand their service area. They have completed 100 million miles of autonomous driving to date and hope to expand in 10 more cities in the US. So that's it for this episode. Let me know if you like this type of content, subscribe to the channel, and see you in the next one.